Um, I saw some statistics from CoreLogic and others that the defect rate on income is something like half of all defects that are looked at in the files that are reviewed. So half the defects are income computation related. And when you look at the number of files that have defects of any kind, it's still a pretty high number. So think about this. I walked through a manufacturing facility that makes very large parts for earth-moving equipment and oil industry equipment. These parts weigh hundreds of pounds to thousands of pounds. They have 50 to 60 operations on where they're drilled, they're machined to tolerances of a thousandth of an inch. And it's done reliably, and each time the operator who's doing this on a manufacturing platform does it, they look at the build sheet, they build it, they test it, someone else is looking at it before they essentially turn it loose to manufacture the part. And as it moves down that line of manufacturing, it comes out the other end and the defect rate is zero. And you go, how can that be? This is hard. You've got people that are skilled operators, but they're not physicists or college degree individuals. They're really, really very good tradesmen. And they can make these parts without any problems, and they're complex parts. Think about Southwest Airlines, went through their training facility as part of the research. Got to understand how difficult it is to dispatch an aircraft, to fuel it properly, to get it to the right gate, to get the maintenance done. To get
that's something where it's like, please explain, in one sentence, the world and all that is within. Yeah.
And by the way, and you don't even get to fly Southwest as great as they are. Don't even get to fly in a P-51.
Yeah.
When you fly Southwest. I'm going to bring the conversation back to those Mustangs at some point. I'm going to do it.
Yeah, well, we'll get to that. But my point is, the reason you can do that reliably, and the airline transportation industry has had no fatal crashes in the last 18 or 19 months, and they are making money, and they move 250,000 or more people a day, is because they have a process that is the same degree of regulation, if not tighter, because you're now talking about people's lives as opposed to a mortgage. But they reliably do it because they have a process, and they follow that process, and people train. And that process is unbending, and that process works. But yet, the pilots still have the freedom to break off an approach and fly it visually if they wish. They still have the freedom to essentially take the route and take the maneuvers that they need to do, and to request whatever they want from air traffic control. The same as the manufacturing process I spoke of earlier. The people have the freedom to do that, but they know the end game is to make the product perfect, to deliver the passenger safely on time, or deliver the parts completely free of defect. That's not the thinking in the mortgage business. The thinking in the mortgage business is keep the consumer happy, keep the realtor happy, and fix the loan after the fact.
Oh, they're just happy they got that. They're just happy they got the loan. Let's just be real here. Yeah, they're absolutely. I think they're well, to a certain extent. I think also, and this sounds a little like far-fetched. The maturity of the sales process in the mortgage industry, to me, is still somewhat immature. Meaning, like in the car business, the manufacturers are concerned with manufacturing, right? The sales aspect is done through dealerships. Very few, except for Tesla, have distributions directly. I mean, there are some, but there's just very few. Whereas in the mortgage industry, you're responsible for manufacturing, delivery, and selling at the same time. I think with the digital technology, you look at companies, let's say, like Wyndham Capital, Jeff Douglas, great guy. They're building technologies to where they're doing purchase business online, realtor relationships online, managing the purchase process online. And as that kind of continues, and let's say online is the destination versus, up till, let's say, 5 years ago, it was kind of a combination of both, right? I think you'll still see that, right? Because it's hard to, kind of adjust these anomalies when you have an industry that's somewhat fragmented, right? Like the sales process is, okay, am I sending them a paper application? Is the realtor going to get involved and going to say, no, use my lender? Is, is the lender not going to be able to do the loan process for a variety of reasons? What is the underwriting time? I mean, the variance in underwriting time or closing time is tremendous. Like, you have some companies that can close a loan in 60 days, and you have some companies that can close a loan in, let's say, 7 days. Like, you get my buddy over at Movement, right? Where, well, that alone creates confusion amongst consumers, right? Like, if you said, okay, well, you go to this company and you want to buy a car, it takes 7 days, and you go to this company and you want to buy a car and it takes 90 days. Well, that's kind of different. You know what I mean? When you're talking about the same end car, which is a Fannie Freddie product. Do you think that, well, number one, do you agree or disagree with that point regarding some of its transitioning in the sale process? But then secondly, where do you think it's going to end up 2 years from now? Do you think it's all digital, or do you think what do you do with the consumer retail groups, direct to retail groups, or do you think it's going to be some hybrid? A lot in that question, but
yeah. So let me first answer the question from the Mavericks that we spoke to, and to a Maverick, their sense is that it will be a hybrid, not necessarily using a face-to-face loan officer. But if you don't have the ability to have a human intercede and answer questions and coach the borrower through the process, you probably are going to have a difficult time. Yeah. So the pure retail side, clearly even pure retail is a hybrid, because many loan officers will, give the consumer a link and say, hey, go load your documents, go pre-populate some of this information, so when we're together we can spend more time managing your data and managing the transaction structure, as opposed to trying to just fill out the 1003. Having said that, I still have a couple of friends that fill out 1003s by hand, because that's the way they do it. They've been in the industry a long time, and they're not going to change.
Yeah, and I think to that point, I think that's always going to be the case, though. Like, I always think, they talk about the automation of appraisals, right? And it's like, there's always going to be an element of automation, and then there's always going to be an element of block and tackle, right? I don't think it's going to be either one or the other. Like, there'll be companies that carve out niches locally that, nobody could compete with, and then there's going to be companies that go pure digital, pure online everything, and almost to a certain extent compete in a different space, right? You know what I mean? Like, the guy who does the 1003 manually, he still may be able to do that, for the rest of his career, and be fine.
Well, think about it this way, Brian. I think I do agree. I think because there's always going to be some element or some holdover of any industry that doesn't want to advance to the next step of technology. Okay.
Yeah.
And case in point, if you go to Central Park, you can still ride around in a horse and buggy.
There you go.
Okay. Now, granted, it's a very the technology, or lack of in this case, is applied very differently. It's not necessarily like a livery stable, so it's not necessarily for transportation of goods. We don't necessarily move products that way anymore. We don't necessarily use that as a primary form of transportation for individuals. It's more of a recreation and fun kind of thing, but there's still some element of it that exists. Now, I think the same thing is going to likely happen as we make the transition digitally in the mortgage industry, just like self-driving cars. At this point, we're being told by 2020, which is only 2 years away, that self-driving cars are essentially going to become ubiquitous, and you're not going, and the trucking industry is going to be gone. You're not going to have truckers anymore. You'll just have automatic cars, self-driving cars. Again, there's going to still be a human element involved. As long as humans are involved, there's going to be a human element involved. But I think what we're looking at here is, and what Jim's really focused on, is how we're going to utilize that technology to minimize the human interaction or minimize the human element, right? And make the focus of the human element the service aspect of it. You know what I mean? Because that's the part of it that the technology can't replicate. The human service part of it, the interaction, the human interaction. To Jim's point, the person to answer questions, right? The person that can intervene if something needs to have an answer or resolution.
And I think that's a very solid point, because when we we talk about digital transformation, successful digital transformation occurs when you take the low value-added commodity activities like collecting documents or doing the mathematics or assembling that file. That can be digitized. And with thoughtful process, starting at the back end going forward, you can make a lot of process improvement that really makes a difference in the amount of labor and touch labor and rework that has to be done.
So
I don't think we'll get to the point. I don't think we'll get to the point where there's never a loan officer involved. But here's the point that I think comes through from all the Mavericks. The human interaction with the customer or the realtor should be on high value-added relationship-building activities. It should not be, give me your pay stub for the 7th time. It should be, let's talk about how long you're going to be in the home. Let's talk about what's going to happen to your income. Do you have enough cash to comfortably live in this house and do all the other things that are there? Should I float? Should I lock? Should I take an arm? Should I take a fixed? All those types of questions build the trust and the relationship of the loan rep or the loan officer or who's ever interfacing with that customer. That's the high value add that probably shouldn't be digitized. What should be digitized is just all of the processes to get that information, to verify it and get it in a place where an underwriter can say, yes, it makes sense. Yes, there's nothing left for me to do. I've put all these conditions, and I can reliably say and comfortably say with certainty, this loan meets the requirements of the investor and away it goes. And that is possible today just by literally starting at the back and working forward. If you look at Quicken's approach to business, they rarely meet the customer, but they are a direct lender that has the highest consumer satisfaction 8 years in a row. You look at Debt Still from Pulte Mortgage. They never meet the customer. The customer is always presented to them through a direct-to-consumer channel. They achieve tremendous relationship with the customers, and they achieve tremendous customer satisfaction scores from a customer where you never face-to-face meet that customer. I've gone through her process in buying a home in Florida, and it worked pretty well. The person that was my loan officer, I got to know pretty well, and most of the time we were talking about high-value add stuff. Yeah, I didn't have to get my tax return 3 or 4 times, but